Welcome to Capital Market and the Security Analysis for Ethiopia. This is second video. I am Balai. In the previous, we have discussed the definition of financial system, and now we are going to see a financial market. Financial markets, as we defined in the previous video, is a platform or a place or a system or a mechanism that facilitates traders to buy and sell financial instruments in the securities such as bonds, stocks, various international currencies, and the derivatives. Financial market facilitates the interaction between those who need a capital with those who have a capital to invest, or those who have excess capital with those who have not a capital or with a shortage of capital. It also allows participants to transfer risk or generally through derivatives and promote commerce. It's used for transferring of risks in derivative markets. When we come to classification of financial markets, we can classify financial market based on their criteria. The first criteria is nature of claim. Based on nature of claims, we can classify financial market into debt markets and equity markets. Based on the issuances or freshness of the claim, we can classify financial market into primary and secondary markets. Based on the maturity of the claim, we can classify financial market into money market and the capital markets. And based on structure of the market, we can classify financial market into exchange traded markets and over-the-counter or OTC markets. Let us see detail of each. Based on the nature of claim, financial market can be debt market and equity market. Then what is debt market and what is equity market? Let we see. Debt market is the market for debt security, such as treasury bills, bonds, or mortgages. The issuer of the security or the borrower in another terms receive funds, and the holder or those are lenders or the owner of the financial assets subsequently receive a fixed amount of payment over specific or specified period of time or maturity. The difference between equity market and the debt market in one way or in another is this fixed amount of payments. The debt markets or debt holder gets fixed amount of payments. That means the interest in the principal, and that of equity markets get flexible amount of payments. And also there are difference in different criteria that we are going to see. Equity market, this is also based on nature of the claim. It is the market for equity security, such as stock or share. It makes the buyer the owner of the shares enterprise so as to earn dividends. If you have shares, that is equity market or equity, you are the owner of the company, and then you will get a dividend. Or for example, if you purchase share from corporation, you can get a dividend. And the equity titles do not expire, and their maturity is indefinite. The maturity is unlimited. And also the payment is not fixed, it is flexible. The payment is based on the performance of the organization. If organization perform well, you can get more. If the organization perform less, you get less dividends, in opposite of that of debt markets. But in debt market, the amount you get is fixed, and also the title you get is limited. It is expired at maturity date. The second one is based on issuance of the claims. We can categorize financial market into primary market and the secondary markets. A primary market is a security issued initially or fresh securities are traded. New securities are offered to the public for the first time via an initial public offering or IPO. This is primary markets. We can sell for the first time our security that is on initial public offering. The second one is secondary markets. After it can sold to, or after it has been sold, the share can be transferred from one person to another person on the secondary market. That's why we call it secondary market. As second-hand securities are traded. Exchanges such as New York Security Exchange and also NASDAQ or National Association for Securities Dealers and automated quotations where stocks are traded. Their place where we can exchange or sell our securities. The New York one is a New York Security Exchange is a physical place. You can go and sell your products or your financial assets. But NASDAQ, it is online. It is not physical. Rather, it is electronic place. Electronically or online, you can sell your securities. Whatever the case, both are stock exchange where buying and the selling of the securities are taking place. They are place. So their difference is only one is physical, New York Security Exchange, or the other is or NASDAQ, it is online place. It is not physical place. The third one is based on maturity of claim. Financial market can be divided into money market and capital markets. Money markets, a market in which only short-term securities are traded. Example, commercial papers, certificate of deposit, treasury bills, and the like are called money markets. Why they are money markets? And the other is capital markets based on their maturities. The maturity of money market less than 1 year. The maturity of capital market is more than 1 year. That is, capital market is a market in which long-term securities are traded. Example, stocks, bonds, and ETFs. So, for example, the maturity of money markets, such as treasury bill, for example, in Ethiopia, we have 4 maturities. The first maturity date is 28 days. Then the second maturity date is 91 days. The third maturity date is 182 days. And the final or the fourth one is maturity date is 364 days. This is the date at which securities are matured and the owner of financial asset or treasury bill takes this payment and take it back the paper to the organization or to the government, for example. But under capital markets, the maturity is more than 1 year. That may be 5 years, 10 years, 20 years, and the like. After 20 years or after 5 years, the owner of or the lender of the money can get its principal as well as its interests. The fourth one is based on settlements of claim. Financial market can be classified into cash market and the derivative markets. This is based on settlement of the claims. Cash market. It is a market for immediate delivery of end payments for commodities or financial instruments. It is a market where settlement of transactions are in real time. This is cash based. The other is derivative market. This derivative market is used for transferring of risk. You can transfer your risks by purchasing or by selling of the securities. We will see this derivative market in the future. For now, it is a market where settlements and the delivery occur at future dates. It is a market for the delivery of and payment for commodities or financial instrument will be made in the future. That's why it is called as derivative markets. Number 5, based on the structure of the markets. Based on the structure of the market, we can categorize financial market into exchange traded market and over-the-counter market or OTC markets. Exchange traded markets. It is a market where securities are traded in central locations such as stock exchange. We have centrally located place where can we sell our product or our financial assets. It is exchange traded market or security exchange market. Centrally located place where can we exchange our securities or where can we sell our securities. This market with centralized authorities in the setting regulations like New York Security Exchange and National Association of Security Dealers Automated Quotation. This is, as we said, their place where can we exchange our products, but the one is New York one is a physical place that you can go and sell your products, and the NASCA is online place. The other over-the-counter or OTC markets. It is a market where trading takes place directly between parties rather than on an exchange. There is no any person in between. Rather, both parties can trade to each other. In OTCs, securities are traded without an organized trading location but traded via dealer networks. There is no centrally located place in OTC. Rather, it is disorganized, but it can be traded via dealer network. Whatever the case, both are stock exchange where buying and the selling of security take place. Both are a place. With this, I came to the end of the today's program. For the next time, we will learn function of financial markets. I thank you and please subscribe and like. Have a nice time.